Welcome back for another yummy update. You're my friend. I'm your friend. We're all going to make it. It's been a very quiet weekend, but we've come a long way, haven't we, friends? I mean, Ethereum was just going to zero literally, 130 days ago, I think. So I think we're doing pretty good. I want to show you what's going on here. This is a nice meme. This is a ChudJak meme with a giant brain because this guy thinks he's really smart. It is hilarious. This perfectly captures what is going on in crypto right now. These memes tell us so much, friends. Look at this. Crypto is topped. This is literally, what I want to do is I'll play some PUBG music. This is everything in a nutshell. Hyperliquid is a scam up here. This person doesn't actually trade. Actually, I went full portfolio Bitcoin, 0.04 BTC. So how much is that? I don't even know. It's like, $3,000. Just being realistic here. That is a quote. Yeah, that is so common. They go, oh no, I'm just being realistic. Just be realistic. Man, friends, once upon a time, Ethereum was $13. And someone said a realistic target was $50. Okay? Then it went to 4,000. Do you know what I mean? Once upon a time, Bitcoin was $100. And people said a realistic was 500. Now it's up at 120,000. You see what I mean? Realistic. What's realistic mean? Look at this. Just bought launch coin. Once an entry when the price is going up, feels relieved when the price is going down, but doesn't buy. This is so true. Every futter out there. Look at this. Full portfolio Ethereum until April 2025. Sold the bottom, shorted the whole way up. 87% down year to date. Now, if you're holding a lot of coins, yeah, you could have many coins down that much. But when they're talking about this is net trading realized losses. That's what they're talking about. Okay. 2021 fractal. This is 100% true. Everyone just goes to the chart from 2021 where we go double top or we go back down and then just everyone out there all over Twitter. Man. That's why it's climbing the wall of worry, man. We are out here. Look at this. Sold everything in April. Bought back before Iran war. Sold everything again. Wish I voted for Kamala. Is Canadian. Oh, man. This is a good one. Bitcoin treasury companies. Treasury companies are a top signal. No, they are not. No, they are not. They will be. No, they are not. Okay, because this is a movement. Yeah, these are the believers coming in now. They're not top signals. They're gonna get the top signals in later. Taking profits here. 20x long from 1% lower. Yes, this is so true, friends. A lot of the people say, oh, I'm taking profits. Yeah, it's because, friends, they're all doing leverage. They don't believe in any of this stuff. Was bullish in Q1 of the year. Perma bear since April. That was the Trump tariffs. It's late cycle, bro. Better be careful. Friends, this is perfectly encapsulated. This is literally the zeitgeist. You want to talk about zeitgeist being captured from a friend event? That's literally it, friend. This is the perfect meme. That is exactly what's going on. I mean, look, this person was able to make all these quotes and stuff out here. Okay? See, there's no bullish stuff out here because there's basically the uncommon scenario. Also, friends, I've got to give you a special reminder. Please, warning, security. This guy lost $649,000 by sending 140 ETH to the wrong wallet after address poisoning. So what is address poisoning? What they do is, friends, they find accounts with a lot of money and they will generate an address that looks similar. So if the beginning of your address is 0x12345, and let's say it finishes at let's say the first 5 digits 1 2 3 4 5, and the last 5 digits is like A B C D E, right? The last 5. Okay. What they'll do is they'll find addresses that the middle is different, but the first 5 and the last 5 look similar. Yeah. And then they will, from that address, they'll send you a bit of money, just like 1 cent. They'll send you a tiny amount of money. And what they hope is when you come to transfer money, they hope that you go through your transaction history and you see their address, which appears, but you think it's yours because maybe you've done 5 transactions and they hope that the top of the list one is their one. So when you go to copy paste it, you actually copy paste their address to send money to, and then you transfer money and you send it to there. Now, how can you avoid this? Number one, of course, if you're going to send money, friends, there is a feature in MetaMask and these wallets. You transfer to your own wallet. You don't put anything in, number one. Number two, never, ever, ever get your address from Etherscan or any of these other ones ever. get your full one. Keep it on like an Excel sheet. Remember, it's your public address, not your seed phrase, your public address. That you just get there whenever you want to transfer money, and always triple check it, please. So yeah, it's very, very it's tough, man, to see this person lost 650 grand pretty much. So look, first copy your address and send it to your email. Then copy your crypto address from your email address. So just showing it out here. Yeah, this is, yeah, man, you got to imagine, man, how painful that is as well, because that's, you know, that's in ETH, and as ETH goes up, it's going to be even more pain. Now, are we getting silly in this cycle? Yeah, we're getting a bit silly. Are we the most silly? No. But look at this, okay? USCF is filing for an oil plus Bitcoin ETF, which will give 100% exposure to crude oil and 100% exposure to Bitcoin. It is a 2x ETF leverage, just dividend, but 2 assets a la the return stacked ETFs. Oh, Mr. Moggington, Meme Smith, Ule. I'm getting 2x cheek exposure. Mog. That's awesome. Well done, sir. Well done. Yeah, so we're getting silly here with this leverage. We're starting to get silly, but come on, man. Like, crypto, come on, bro. It's crypto, dude. We don't get a bit silly. You know, we go the whole way. You know what I mean? We go not just a tip. We go full retardio here in cryptocurrency lands. Also, want to show you this interesting as well, friends. So remember, James Wynn has been getting into a bit of a public fight with Arthur Hayes, which is hilarious. So James Wynn called Arthur Hayes a shit trader, pretty much. And then Arthur, friends, you understand, it's the pot calling the kettle black. But yeah, it was gold, right? So, but Arthur was looking at him like, dude, you literally lost $100 million publicly on chain in a 3% Bitcoin range, and you're calling me shit. Like, so Arthur's bubble maps went and stalked James Wynn. James Wynn, friends, he tagged this coin, money isn't real. And then he tagged this random shit. Friends, this is why another meme coin, USDM, okay? It's 70% bundled, which means, but friends, bundling's okay. It's just, that means someone has supply control. Now, the thing is, though, it's just 70% bundled, but then, like, it doesn't even make it out of the running horse. Like this, 6 days later, it's dead. 24 hours later. So after he shills it, 24 hours later, it just crashes down. So just showing you, man, this is why crypto is tough, friends. It's very, very hard to find something you got a thesis on that you believe. That's why, friends, like XRP people just crushing everyone because you got to deal with a lot of this junk, right? The bundle doesn't work out, already dumps down. Welcome to crypto. So, you know, that's the type of stuff that's been happening. That's PvP, what we call PvP. There's not enough new people coming in yet. Now, I'll also bring you kindness and friendship. Lots of kindness and friendship here. Do you remember Ian Balina? Now, Ian Balina, friends, he's a 2017 cycle relic of the past, okay? Ian Balina, all of you, pretty much everyone, you guys all participated with him. I wasn't in crypto at the time, but apparently he had like these spreadsheets and he did like, you know, 100 pretty much ICOs, and he said this coin's doing like 4,000x, and it was pretty much, yeah, you all know the names. I don't know the names. You all of you have an Ian Balina story. This is kind of funny. He's like united everybody in crypto. Everyone, because he was like doing these ICOs and stuff out here. And, all of them end up being pumper dumps. Just was wild, man. So, so he's not a Jim Cramer signal everywhere. Just sometimes when he gets popular, his signal just doesn't end up being wrong. End up being correct. Okay, not wildly incorrect, but just whatever he says, it just doesn't play out. Okay, and it's rare when he appears. It's like once a year. When he appeared in 2022, I think Bitcoin was in like March, and I think he went in February, March. I actually show you, and he went on like MSNBC. I think maybe he was around here, and he called for Bitcoin. I mean, maybe Bitcoin was like 40K. Everyone believed Bitcoin was doing a higher low, and it was going to 100. That's what most people believe. See this? Look, it was doing a higher low. It looked like that, didn't it? It's kind of funny, friends. Like, everyone thinks they can just walk away and sell. Look how this looked like it was literally ready for the moon. You see that? It looked like it was literally, look at this big higher low, like ready for the moon. Ready for that 100K. But then, you know what comes next, right? The bear market. So Ian Balina's come down out, and he made a video on Ethereum. Now, I got shit scared because Ethereum's up. And I'm thinking, oh, crap. Maybe we are going to get cursed. No, you'll be surprised. I bring you good news. Ian Balina is usually good counter signal. Now, He thinks Ethereum's only going to about 8,800 this cycle. I go, interesting, because that's what I thought many, many years ago. We're going to get cursed. I go, well, but now if Ian thinks that, maybe we get a bit of an upside surprise. By the way, the upside surprise is US dollar pricing, okay? Because even Ethereum at $13,000, which is huge, right? Which is way above his moon case, by the way, I'll show you. Even Ethereum at $13,000, if Bitcoin is 200K, 200,000, that means your ratio is here. All right, 0.065. Okay. Now you might say, oh, is that good? Is that bad? That's trash, friends. Because if we are here, and if that's the top, you got to understand, dude, Ethereum, it's been bleeding against Bitcoin. At that point, it'll be 11 years. If it gets a 0.065, by the way, that's still trash. You're still down 58% after 9 years. And by the way, it's probably going to be the top. It's not like it's going to keep just going up forever. You know what I mean? So that's still horrendous. Oh, yeah. And they make it even worse. You peaked at 0.088 in 2021. So for you to get here, that's still a failure. Now you might say, Sammy, what would make it not a failure? Give me 0.09. If you want to be a non-scam Ethereum, you go to 0.09. Yeah? That's $18,000 if Bitcoin's 200K. You know what I mean? So we're blowing big valuations. I mean, I hope it happens, but we'll see. Okay, so that's what I'm going to show you now. Ian Balina, he thinks 8,800, right? But he calls Ethereum $10,000 moon boy optimistic. And I'm like, man, I guess we got a good shot at 13K. Now, I want to remind you as well, if you did the fractal of the, say you did, not the fractal, the Fibonacci, the major fib of Ethereum, in the last cycle, friends, so if you draw a Fibonacci from the top to the bottom here, you end up, actually what we'll do, I'll show it for you right now. If you draw a fib from the top to the bottom, Ethereum ends up between the second and the third. Between number 2 and number 3, okay? If we do between the second and the third again, which is, it doesn't diminish. But if we do that, we get about $13,000 here. See that? It's about $13,000. So, for all the pain and the misery, that would be fantastic. And you know what? People might say, hey, so what comes up to $13,000? I don't know, friends. Maybe we just drop freaking 80% again. Oh, man, that'd be crazy. If we dropped 80% from here, that's wild because that would come back and fill the CME gap. There's a CME gap here at 2,800. So if we come up and drop 78%, yeah, that would happen again. And you might say, oh, but Sammy, aren't we diminishing gains? Aren't we going to drop less than last cycle, not more? Well, here's the thing, man. We might just go higher than we think. Okay, the retracements, friends, see, this is the people just think, oh, you're going to drop 80% in your bear market. Yeah, but no. It's from where, bro? You know what I'm saying? Like, you only get the big drops because you pump up heaps. Yeah? If you never pump up heaps, you don't get in your 80 to 90% drops. You're getting like 65%. But 65%, it sounds nice, but it's not actually nice. It's you dropped little because you didn't pump up so much. Perfect example, friends, is XRP, which I'll show you now. XRP, friends, people in the last cycle, okay, they were saying like, they're like, oh, XRP is great. It's only down 84%. It's only down 84%. Yeah, but bro, you didn't even break your 2017 high. That's why you're down here. If XRP went to say $4 last cycle and came back down, let's do that percentage. It goes back down. There you go. Now you're down 91, 92% like everything else. Do you see what I mean? So your dumps, they're a function of how high you go up in the first place. Also, I want to give you an update. Pump Fund ICO entry is, as we expected, ICO resistance. All the Jeets are getting out here. Friends, you got to remember, man, they're doing the biggest psyops. Everyone's like, oh, I believe in it. You're all getting out at this ICO average entry. It just reminds me of the Pulse Chain stuff out here. And then there's not enough buyers to pretty much take it further than that. We'll see what happens. Also got to give you this yummy update, friends. So the World Champion Shopping Cart Finals are here. It's time to lock in.
Ja.
Der sieht auch nicht schlecht aus. Der war richtig gut sogar.
Aber kerzengerade wie beim Aldi. Oder?
Ja, super.
Ich weiß nicht, ob er das beim Aldi so macht. Wieder Ausgleich.
Man merkt, wir sind richtige Hausfrauen, ne?
Ja.
Und wir sind ja.
Hätte jetzt von dir gar nicht so gedacht.
So, This is actually real. This is awesome. Locking in. I want to see more of these extravagant, competitive feats. This is bull market stuff, and this is every we're taking it to the next level. Now, as well, the next level, we've got to remember, right? As we move up, higher level. There's people along the way. Bears sound very smart. I've already shown you here, friends, like steady lads. Everyone sold pretty much something. Everyone sold something. Every single person on this podcast has been selling ETH and or exiting altcoins. One of them even sold 90% of their stack because they're just, man, they got so much PTSD, man. You can just hear it in their voices. Oh, friends, we got PTSD too, but it depends what you do with it, right? I got PTSD and I'm like, you know what? I'm just going to hold for a bigger target now because you owe me money. And I get it, friends. I get it. In markets, that's like a ticket to Wreck City if you don't know what you're doing. But I think we're going to win. I still think we're going to win. I see too many people getting bearish immediately as it goes up. It reminds me of the Disbelief Rally because they've been like so offside for so long, right? What ends up happening is as Ethereum comes back, right, which is what we've seen right now, they're like, I can't believe it's come back and we haven't even like upgraded the tech. And I'm saying, dude, you didn't get it, dude. You just don't get it, bro. You were right the whole time, yeah? If you're a long-term holder. All right, but they don't see it, friends, because remember, okay, the university nerds, the professors, they measure risk like losers, which is the trader guys, scam. They measure risk by price volatility, right? That they have their cute little shitty Sigma formula. I did it in uni too, friends. I did all that in uni, okay? So that's how they measure risk. They measure risk is how much price can go up and down, okay? But that's not how you should measure risk, according to literally the richest people on the planet. The richest people on the planet do not measure risk by price volatility. The richest people measure risk by assessing things you don't know, all right? So assessing things you don't know, that's your risk. If you learn about something lots and lots and lots, and you have a good idea, you can grasp it, you can enhance your circle of competence about it, right? You lower your risk. Yeah. Look, kind of like, friends, if I have a coin and it's going to flip 50-50, if you know all about the game, you have zero risk because you understand there's 50-50, okay? You understand the odds, you understand the payout, okay? You completely understand it. The risk stuff is the stuff you don't know. Now, it's totally different to the price risk because price risk, I'll give you this example. Well, I'll use an old example, right? Friends, if someone in the street, let's say you live in a street, there's 30 homes in the street, 30 houses, yeah? If one guy, let's say he gets a taste of meth, he becomes a meth junkie, and he has a gambling problem, and let's say every house on the street is worth, let's say $1 million, and he's got a mafia gang. The mafia says, hey, I'm going to kill you. I want money. I am mafia. This guy, okay, friends, he can't sell his teeth, he's got none. He can't sell his underwear. He's got none either. He liquidates his house for $100,000. The last print in the street when everyone's worth $1 million is $100,000, okay? Now, if you were to chart that in their models, they go, bro, houses in your street are the riskiest things ever. These things are literally volatile as hell. Went down 90%. You see what I mean? It's the same thing like this, but we don't see that in markets. No. By default, we see a crowd of people selling, so we don't see that as risk. We don't see, as opportunity. We see it as risk, okay? So it's one person's risk is another person's opportunity. That's why you're trying to hunt for information asymmetry to see like, okay, people selling, I'm trying to grasp, why are they selling, okay? Are they selling because Bitcoin's down and they're getting liquidated on a margin exchange? Okay, cool. That's opportunity for me because you're not selling based off like the future pricing. You're selling based off now, okay? But that's why when you have a disbelief rally, why are these people selling? Why are these people selling? They're basically selling because it's irrational. You've had PTSD like the rest of us for 4 years, and now you can't wait to get out because you don't want a round trip. But you're like completely missing sight of stablecoin supercycle, completely missing sight of Tom Lee acquired all his ETH. He's going to keep shilling it. Completely missing sight of the AI underpinning the economy, of the business cycle still being down. Okay, do you get what I mean? Of ETH-BTC ratio still being low, of Bitcoin dominance still being high. So you know what I mean? I'm just trying to show you there's a different scope to these, and bears always really, really sound smart. But you know what? Each to their own. We'll see. So all we can do is go back to the basics, friends. We have the 6-month chart of Bitcoin. This is the longest running Bitcoin up-only run in history now. Yeah, if we finish December green, right, it is confirmed it's the longest in history. You know, it's the longest by 6 months. It's still the longest in history. Okay, so Yeah, it would be fitting, man. Imagine we are 200K by December this year, and then Bitcoin January next year spikes up to 240. January, February, you know? And then everyone thinks, oh my gosh, it's going to be the 7th green monthly candle in a row for 6-month period, but then it just finishes red by June next year and begins a bear market. That would be the most fitting tale. So we're going to have to get the 4-year cycles out somewhere. Okay, maybe it comes soon. We'll see. Like, subscribe. Catch you in the next one.